Hey everybody, hey traders, Chris Pulver here. Wanted to walk you through some of my favorite tools and resources with the Edgefinder Pro. Let me go ahead and get myself out of the way, which is right here. Let's jump into the Edgefinder. And so on a daily basis, I'm pulling up the Edgefinder and I start pretty much top down with the Edgefinder Pro. Take a look to see how the software scores the top setups in the markets. My favorite thing is it is incorporating so many different asset classes. We've got the Nikkei, we got the S&P 500, we've got some exotic currency pairs, we've got the Dow, the Nasdaq, the German DAX, we got all these currency pairs in the Forex market. You got Bitcoin, small caps, the FTSE, you name it. I mean, gold, platinum, silver, all these instruments. Just starting to see, based on their scoring system, which they explain how it scores with the EF score indicator, what is exactly scored bullish or very bearish or very bearish. So the way I look at it is, for decades and decades of trading, if you are simply a trend follower, this works great. What is very bullish? What is very bearish? Follow the momentum, path of least resistance. That works wonders for a lot of traders. When we go down the list here, I also like to look at sentiment and positioning. The COT data, one of my favorite things to see if we're looking at contrarian indicators, the smart money indicator. Retail sentiment, the AAI investor sentiment I really like as well. Typically it's this. If we have big swings in commitment to trader data, could that be momentum is forming? Could that be tops and bottoms? I tend to be a bit of a contrarian when it comes to overcrowded trades. So when it comes to retail sentiment, I'm definitely contrarian where the retail crowd is. So if the retail is bullish on something, I'm typically looking to position institutional and go bearish. AAII sentiment, if we start to see aggressive bullishness, think of that as very greedy. I tend to look at some protection, starting to move stop losses, trapping profits. And you can follow that here in sentiment positioning. That's using some really good scans on just the overall, smart money versus dumb money kind of phenomenon that's worked out very, very well for a long time.
Hey guys, I just wanted to jump in and mention that all of the information that Chris is talking about here for getting access to the Edgefinder during this Black Friday discount can be found down below in the description of this video, or if you're reading this on an email, it should be attached to the email newsletter for your convenience. Promo codes, checkout links, and of course the bundle pricing offers that we have can all be found down below in the description. You can also add to your checkout the Pulver alerts, which allows you to see all of the trades and signals that Chris Pulver, who you're listening to, is sharing directly within our Discord VIP group.
Seasonality, one of my other favorite tools. If we click on this and go to the month to year trends, just take a look at the S&P 500. Historically speaking, from the 10-year average, we typically see mostly bullishness, with the exception of the September effect, which is historically the only month that's averaging pullbacks. This year happens to be an election year, and so we see a pullback in September, which actually didn't happen. The market actually ripped through September, had a brief sell-off right after Labor Day, but was up for the most September and still hit all-time highs. Here we are starting to show a little bit of gains in October, but not much. We're clinging to these highs. We're just a couple weeks away from the election, but the average October historically for the last 10 years is pretty much flat. So if we're sideways and flat, the market kind of makes sense of, is it enough to justify a Q4 rally, which a lot of times starts late October, kicks into gear with a big November, and then we have those holiday times too where markets are pretty thin. Path of least resistance is happening, and November and December are nice drift months. So seasonality also a very good tool to follow. You want to see all the news, all the major economic data in one place. Look no further than your economic growth. Take a look here, GDP growth, ISM, PMI numbers, manufacturing, services, retail sales, all these things that are important to see what the overall economy is doing for the U.S. Go to the labor market, non-farm payroll, the ADP job numbers, unemployment rate, unemployment claims. Good things to see what's happening, especially in 2024. Summer this year, the markets were showing us trends that the job market was softening, the inflation data as well. These have been the two major stories from the Fed. We need to make sure that we tame inflation. We need to make sure there's price stability and solid labor market. And so the Fed took a bold stance and cut 50 basis points in September. Here we are looking at more cuts coming November, December. Is it the right decision? Is it the wrong decision? Have they navigated a soft landing, no landing scenario? We're about to find out. But the Edgefinder has given us these trends with really visually friendly things to look at, where you can see, hey, inflation was sticky for 12 months and finally started to trend lower. So take a look at year-over-year inflation here. So we had sticky inflation for about 12 months, and then just over the last June, July, August, September, October, we're starting to trend lower. Now, that's a good sign for the Fed to justify cutting rates, because our restrictive monetary policy has almost become too restrictive. And so that's why they've started to cut. We'll see how long that cycle goes. Take a look at non-farm payroll. We had a big beat. The forecast was 147, came in 254. During the summer months, we're starting to see this trend lower. We can see that the job market was looking a little bit softer, and there were some revisions. But for the most part, we still had steady positive growth. We just had a bit of a scare here in July and August as it was trending lower. We were missing some forecasts. But then since August, September, October, we started to see the job numbers get better. And that kind of solidified everything that the U.S. economy has proven to be pretty resilient. Unemployment rate continues to push a little bit lower as opposed to this rally we saw from 3.7 up to 4.25. It did get a little scary there from end of December into summer this year. But things have stabilized in the labor market. Now it's back on inflation. We'll see how everything plays out through the rest of the year. Take a look at interest rates. One thing we've seen a lot of this year was the U.S. Treasury yield curve. Comparing the 10 versus the 2-year, 10 and 2-year inverted yield curve. It's been disinverted now, but this is the 3-month versus the 10-year. Another really strong sign. Here you go back into the 90s. Anytime we've had an inverted yield curve, it tends to coincide with some type of recession or some type of bear market movement. This is 1998, where we did have the market go up from 1998 to 1999, but fell very hard with the 2000-2001 dot-com crash. You go forward here into 2007, 2008. We all know what happened there with the Great Financial Crisis. Again, 3-month and 10-year came out and became disinverted. This was probably going to be, everyone watches the 10 and the 2-year. The 3-month versus the 10-year is probably more important when it comes to this one getting disinverted. If this gets disinverted, I have a feeling that we are going into some of these major pullbacks and bear markets like we've seen in the past over the last almost 25 years. What else we have here? Price forecasting. See how they score it. We've got essentially a pitchfork where we can have the trend going up. We've got the high side and the low side based on standard deviation. If we go into the market heat map, economic calendar, again, what I love about the Edgefinder is so many tools, so many resources, so many data points are coming right into the Edgefinder for at a glance. So rather than scouring, 10, 20 websites, you can pull all that information in real time right here with the Edgefinder Pro. Going into your fear and greed, risk on, risk off. I love this stuff as well. And then look no further, of course, to the live stream schedule. You can follow your favorite analysts out there, me included. And if you're also interested, not only is the team offering a great discount on the Edgefinder Pro, but they're also including my Pulver alerts. So if you're interested in trading right alongside me in stocks, ETFs, options, futures, and Forex, even in crypto, I trade pretty much everything. I do trade everything. And my alerts have been included with the A1 Trading Team's alerts and the VIP service. And you can purchase that either for 1 year. You can purchase that for a lifetime with a one-time purchase. So if you're interested, have a look at it. They have some awesome deals for the holiday season. And the Edgefinder Pro is one of the biggest sales of the year. And guess what? My alerts are part of it. So I hope that helps. Get your hands on the Edgefinder Pro, save lots of cash in the process, and hopefully make lots of money in the process. So with that being said, I'm Chris Pulver. I'll see you in the live markets. Happy trading and lots of profits.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.